Today we're diving deep into one of the specific cornerstone trading plans of smart money concepts, using the powerful tool of change of character. For many traders, setting up trades based on the change of character can be a challenge, putting their trades at risk simply because they might not be familiar with the key points and tips we are about to share in this episode. In this episode, we not only share essential tips, but also reveal precisely how and where to enter and exit a change of character trade with an optimized strategy.
If you're frustrated by losing streaks and wish you had the guidance of a professional, I've found a solution for you. Forget about uncertainty and blown-up accounts. From now on, you have the opportunity to follow the strategies of a professional options trader who gets a consistent 80% plus win rate. His signals are highly accurate, and the process is very simple. All you need to do is attend daily live streams during market open and enter and exit trades along with Winger in real time. In addition, you'll learn high win rate strategies that have been proven to work.
If you're interested in automating your trades through the help of our advanced automated trading system and gaining over 70% to 83% daily, be sure to DM me on TikTok or Instagram for step-by-step guide on how to get started.
Welcome back, traders. So, let's get started. As you know, smart money concepts classify entry methods into two major categories: reversal and continuation entry methods. The reversal entry includes the change of character and flips entry methods. We have thoroughly covered all the criteria and rules needed to identify a valid change of character in the market in the previous episodes. I highly recommend going through our channel and watching them, as they provide valuable insights into understanding changes of character. Now in this episode, we're putting all that knowledge together. We'll understand how to leverage these concepts to our advantage and establish a trading plan based on the change of character. This approach carries a higher win rate ratio with precise entry and exit points. Now, let's delve into the basic instructions that should be considered to properly implement the change of character in our trading strategy. Firstly, we should conduct market structure mapping on the 4-hour time frame and highlight unmitigated areas of interest, and wait for price to tap into the 4-hour time frame's demand or supply zone. In the second step, we shift to the 15-minute time frame to gain a clearer perspective on the price action and search for any signs of a change of character in market behavior. If the price forms a 15-minute time frame change of character pattern, we proceed to the third step by zooming into the 1-minute time frame, searching for any signs of a change of character. After fulfilling all the mentioned criteria, we should now proceed to the last step, setting up an entry on the 1-minute time frame. Now that we have a general outline of the core steps involved in the change of character trading strategy, let's delve into the details of each step, starting with the first one. Imagine we have a 4-hour structure like this one on the screen. Price is in a downtrend and also has created a series of bearish BOSs. So here we have an unmitigated supply zone at the extreme. Let's say that we have a perfect sell setup on the 4-hour time frame, which is confirmed by the criteria and rules of a high probability trading setup. Our next step is to switch to 15-minute time frame, closely monitor the price movement, and patiently wait for the price to return to the 4-hour time frame supply zone and form a change of character pattern. After detecting the confirmation for market structure shift in the 15-minute time frame, to apply our trading plan, we need to follow a few steps. First, we should identify and highlight the supply zone generated by the change of character's bearish wave in the 15-minute time frame. Then, we need to zoom into the 1-minute time frame and patiently wait for the price to tap into the identified 15-minute time frame supply zone to get reversed from it and create a change of character on the 1-minute time frame. Once the change of character is confirmed in the 1-minute time frame, our next course of action is to identify the order block generated by Choch's wave in the 1-minute time frame. Subsequently, we place a sell limit order at the lowest point of the zone, with a stop loss set a few pips above the highest point of the zone. As for the take profit, we have the option to target the unmitigated demand zone on the higher time frame like 15 minutes or 1 hour, or the swing low of the current time frame. These steps will help us execute an entry with a well-defined risk-reward ratio. If you miss the change of character, or if the price action doesn't provide an opportunity to enter the market by being extra volatile, or even price is drastically pushed away without activating your order, then taking the continuation trade becomes the easiest and safest way to execute trades and entering into the market. So here, let's say you somehow missed this entry opportunity during the change of character, or you simply want to open additional positions. The price. After the mitigation of the supply zone, it reversed and shifted its character to the downside by breaking and closing below these structures and breaking through several demand zones. If you couldn't execute any short positions from the change of character's supply zone. In such a scenario, the recommended approach is to use SMC's continuation strategy to enter the market. To achieve this, the price needs to break the recent structure to the downside and pass through these 1-minute demand zones, creating a newly generated supply zone. In this case, I wouldn't recommend placing any limit order at this newly generated supply zone due to potential risk. There's still a high probability that the price could use this supply zone as an inducement to generate more liquidity. Therefore, it's advisable to wait for the price to form liquidity zones and already sweep them before tapping into our newly recognized supply zone. What we're looking for here is a pullback after breaking the recent structure and forming a liquidity zone, such as double bottoms, triple bottoms, or trendline liquidity below the new supply zone. It doesn't matter whether the price pushes to the downside and creates a new break of structure, or remains choppy for a while. After the creation of the liquidity zones below the supply zone, we can now set a limit order in the lowest point of the supply zone. This is because we have a very strong confirmation factor if the price sweeps the liquidity zones that form below the supply zone before tapping into it.